Well, hello everybody, and welcome to your Calgary real estate market update for May. We've got a new Prime Minister coming on board here in Canada. We've got a lot of upset Albertans as a result of not having a conservative government coming in. What does that mean for our marketplace? What is going on with the housing policies we expect Prime Minister Carney to roll out? Let me take you through all of that stuff here today. Okay, well, right now, the theme that still continues despite the election results is this theme of uncertainty. We've got a lot of political upheaval that's worked its way into the media, and it's impacting the real estate market all across the country. There's lots of headlines just like this in Vancouver with unsold condos, buyers out of Toronto and the GTA being uneasy about entering into the market, and even homeowners selling at a loss in that province as well. All right. Now, what we've seen, though, as a result of all of this sort of turmoil is that all of the political leaders had housing as being a key component of their election platforms. And Prime Minister Carney was no different than that. And you can see here how the breakdown of all of the seats worked out across the country. So obviously, red went to Liberal, blue went to Conservative. But what's neat about this is that the darker the colors are, was the more concentrated the voter counts for those particular ridings. And what's really stark here is that the same markets that are having a lot of trouble with the real estate markets right now, they all voted Liberal. So they're looking to Prime Minister Carney to pull them out of this real estate slump that they're in right now, with Vancouver, Montreal, and Ottawa going very solidly into the Liberal camp. And so what's he going to do? What's Prime Minister Carney going to do now? He's into office. He's been elected. What's his plan to get Canada's housing market back on track, make it more affordable, improve sales, and so forth? So a big part of what they want to do is to speed up construction, to add more supply, to hopefully stem some of this unaffordability concerns that our economy has right now. That's much easier than adding more supply and newer properties, is much better than doing anything that could lower prices for existing homeowners. For anyone that's bought in the last few years, they would be hurt by that. So adding more supply is the easiest thing to do. And that's exactly what Prime Minister Carney is proposing to do. And he's betting on prefabricated homes. So what this is kind of like you might see in a trailer park, but a little nicer. Prefabs are built in a factory in different modules and then assembled very quickly on site. So he's saying that he wants to use prefabricated homes to be able to quickly double the amount of new properties being built this year or each year in Canada to 500,000 homes. But you have to wonder, how is this actually going to get pulled off? And what I see as being a real risk here and a logjam to all of these efforts is you see lots of discourse at the federal level for policy surrounding improving or increasing timelines for development. But what happens is the federal government has no control over what's approved locally. Those are municipal governments that will approve development permits and actually allow building permits to be issued. And we're not showing a lot of unity in terms of these different orders of government right now, because Calgarians in particular were quite against this blanket rezoning proposal that was put forth last year. And it's that exact type of thing that you would need to go through to allow stuff like prefabricated homes to be able to be built and put into existing cities where there's pronounced demand. Okay, and we see this other segment here. This is just northwest of the city, some headlines here where developers are trying to build this larger development and are getting blocked by Rocky View County and neighbors surrounding there, lots of opposition to this mixed-use commercial and residential development. So that's not going ahead, and the development community there not too pleased about it. So we have a lot of red tape and a lot of ways that development can be stopped at the municipal level, despite what politicians are saying at the federal level. Now, here's an exception to this. This is Taza Park. Taza is on the west end of Calgary, on the west side of the new Calgary Ring Road. and their development plan over there initially didn't call for any residential, but just in the last little bit, as we've seen all of this issues with respect to unaffordability and reluctance to add meaningful supply to real estate, well, the First Nations don't have a lot of this red tape. They've got a lot fewer things getting in the way of them deciding to do compelling things, and Taz is a perfect example of this. There's going to be 6,500 units going in there, condos, rentals, senior living, all on 110-year leases. And I love this structure because it means developers don't have to pay any money for the land. They just have to pay a little bit each month to lease it from the First Nations, which should reduce the overall expense related to get properties built. And if you layer on prefabs to that, this is the type of engine that we could see adding a lot of supply to markets all across Canada if First Nations were to emulate what the Tsuut'ina is looking to do here in Taza Parks. This is a cool thing. I hope it works out for them, and I hope we can light the way for other municipalities across the country to perhaps contemplate similar things. Some good news for affordability, and maybe not as good news if you're a landlord, but good news for affordability is that we're seeing some declines in rental costs in Canada, and Calgary is one of the largest ones that's seen the largest amount of pullback with that. All right, and to me, this is not a bad sign. We want to be affordable. We want people to move here to start their businesses and to help fuel our economy. We want them to be able to rent at affordable rates to save up money to buy real estate later. So I don't see us giving up a little bit in terms of rental growth as being a bad thing for our real estate market here. I also think it's a testament to allowing the markets to be free without over-regulation with things like rent control. I think that this is a good sign for a market that supply has come in to meet the pre-existing demand, and now we're seeing prices come down a little bit. So a good sign here of what happens when it all works out. Okay, let's dive into some stats now so we can see how the market is responding to all this uncertainty. So last month, we reported a 0.1% year-over-year gain and a price of $592,000. And now we've got the sign of the declines here, okay? Relative to where we were this time last year, we are now down by 1.4% to $591,100. Basically the same price as we had last month. And you can see here, we just are not having the same same start into our spring market that we had in 2024. So if you look over here, we've got on the right side of the graph here, yes, we're seeing more sales, but not a lot of pricing increase. Nowhere near like the escalator that we had here last year, where basically as soon as we turned the corner into the new year, it was like we were shot out of a cannon with sales and pricing going up all the way through. That's not happened here in 2025. Yes, we are seeing more sales, as always happens this time of year, but pricing is staying a little bit flatter with not anywhere near the level of demand that we've had previously. And you can see that here with the months of supply graphic, where we've essentially been in balanced market conditions since last fall. All right. Last year, we started really hot, and you can see here how we were drawing down our months of supply, and then we started to get a lot of inventory in the latter half of next year and still had a healthy amount of sales. Nothing wrong with the amount of sales we've had, but it's allowed our market to be balanced for the last half year or so. Okay, so it can feel, if you're in the business, it certainly feels like a slowdown relative to the last couple of years, but balanced market conditions are good for consumers. It allows sellers to sell if they've priced their property properly, and allows buyers to buy without a ton of buyers to compete against, and the opportunity to do some due diligence and that sort of thing. So much more efficient market than it can be when it's really hot. But to say it's overall balanced is a little bit too generalistic. You have to look a little bit closer here into some of the individual local markets to get a sense for what's going on. So here is something that shows months of supply with this red line that I got on here, 2.5 months, which is the balanced market conditions, and each of the different property types and locations throughout the city. And you can see some trends here. Like, for example, Northeast Calgary is oversupplied in all housing sectors right now by quite a bit. By contrast, Northwest Calgary is undersupplied and in seller's market conditions for just about every type of asset class other than apartment condos. So depending on where you're living or where you want to buy in Calgary and what you want to spend your money on, you may have a totally different experience. So make sure whatever realtor that you're working with preps you and lets you know what you can expect within the market by showing you this graph and helping you to plan what you want to do to be ready for it when making your purchases or sales this year. We do have some interesting numbers to report for the month of April, that we've had the fewest amount of sales since the pandemic. Okay, you can see here, April 2025, fewer sales than we've had in each of the last 4 years. All right, and certainly a little bit more than we had in the pandemic year in 2020. But this is still higher than what we had through all of the economic downturn from 2015 through till 2020. So still good, healthy numbers here, but a little bit less than what we would have had in April of 2014, going back, over a decade. So we're returning back to normal here with the overall pace of our market compared to these very hot years we had in the last 4 of them. All right. And this is because inventory is coming up as well. So why is the month's worth of supply so much higher? Well, we're seeing more of this inventory hitting the market. Okay. And so I think what this is the boom that we had in the new construction space, where we had all these, homes being built and flying off the shelves here. A lot of that stuff is now making its way back into the resale market as the investors look to cash out. And that's what's driving all of this increased inventory that we have here. Okay. So lots more stuff on the market, basically a similar amount to what we had in April of 2021 and April of 2020. All right. Now, if you look at the cumulative effect over the whole year, you'll see that sales are back to pre-pandemic levels too. So this is a year-to-date cumulative sales graph. And you can see here, year-to-date, we are less than what we had in each of the last 4 years as well. All right. Quite a bit less, in fact, than the peak years of 2022. We got off to such a hot start, and a decent amount less than what we had last year in 2024 as well. Okay. So while the market is softening, it's really not that bad. Yeah, there's a lot of stories that are making headlines in other parts of the country that are much, much worse than this. But Calgary seems to be managing the sort of settling down of our real estate market across the country in a really good fashion. And I'm happy for that and happy for our consumers here. Okay. So I'd like to know what you think as a result of the election. Do you think we're going to see more activity or less activity? And again, as always, if you're contemplating buying or selling a piece of real estate, Redline Real Estate Agents would love to help you out here in Calgary. Thanks very much for watching, guys, and we'll see you next video.